Hello, and welcome to another episode of the Real Estate Investing Club, the place investors go to learn tips, tricks, and stories from other investors in the field. If you feel we provide value to you, go ahead and hit that thumbs up, share whatever it may be, and if you'd like for us to cover a specific topic, let us know in the comments or reach out to us through our website. Today we have a very special guest, so buckle up, grab your pen and paper, and enjoy the ride. And we are live. Rob, thank you for joining us today. How are you doing?
I'm doing great, man. It's my pleasure for being here. I appreciate you looking me up.
Awesome. Well, it's a pleasure to have you on. To get us started, why don't you tell everybody, who you are, where you're from, and how you got started in real estate in the first place?
Sure. So I'm from the Washington, D.C. area, but a little city outside of Washington, D.C. called Reston, Virginia.
Okay.
Reston, Virginia is one of the first planned communities in the country. Amazingly beautiful place, right next to Dulles Airport. And I got started in real estate back in 1999, right? I graduated, from college in 98. I had a professor that essentially said, or 97, I can't remember now. Had this professor that essentially said, hey, if you plan on being anywhere for longer than a couple years, you should consider buying a property. And my dad was in the Foreign Service, so we traveled everywhere. So I was like, yes, I want to stay somewhere for longer than 3 years, right? So that's me. I plan on being here longer than 3 years. And I took that advice to heart. And, all the kids call it house hacking these days, but that's what I did. I bought a townhouse. I put in a couple of my friends, buddies from that I just knew from college, and they were paying the majority of my mortgage. And I was like, this is awesome, right? Like, this is amazing. And so right there, that kind of started the path, right? I read Rich Dad, Poor Dad, and I got my mind thinking a little bit. And, I started around that same time. Yeah, so I graduated in 97 because in 98, I started a business with my best friend recruiting technical salespeople for technology companies. And we were working, the way I found this particular townhouse was we were working out of his basement, 1-bedroom, 10 by 10 or 8 by 8 room. And we started making some money, right? And so I was like, well, I'm going to buy a townhouse here next to you. And I found a townhouse like 4 doors down and bought that townhouse, right? And that's how I house hacked it. So for the first 7 years of my career, I really spent building a recruiting business with my best friend. And during that whole time, I was buying real estate as purely just a buy and hold investor, going to RIAs, I just kind of fell in love with the whole process of finding a property that needed these were just cosmetic kind of jobs that I was finding, right? And during that time, real estate was doing this, right? You think about, 98, 99, 2000, 2001, 2005. So I'd buy a townhouse in 2000, and a year later, that townhouse is worth, $100,000 more. And so I'm like, amazing, right? So I fell in love with real estate. And in 2005, I asked my business partner to buy me out of the recruiting business. We'd gone through the dot-com boom. We'd gone through the bust, right? 9/11. We grinded it back out. We'd grown from 13 people, whittled it down to 3 people. And I didn't want to leave during that time. Real estate was doing well, but I didn't want to leave during that time. And when the business got stabilized, I was like, let's figure something out. My heart's in real estate. I don't know what I'm going to do in real estate. I think I want to just go be an apartment building owner, but I'm burnt out of this business, and this will buy me out. So he bought me out, and that was in 2005, so the summer of 2005. And I knew that we were going to go through some kind of real estate recession, not because I understood how to read the numbers, but because I'd gone through irrational exuberance before, and I knew what that felt like, right? During the dot-com boom, we'd gone through that as recruiters. So I knew it felt the same way. So I figured, I told my wife, listen, I'm leaving this high six-figure business that we're making, and we just had a little baby girl, and I'm like, I know we're going to go through some kind of recession, but if we can figure this out, we're going to come out of the other side well positioned. So that was the initial plan, right? That was the plan, and it for the most part, it kind of worked out that way, right? I sold some of the assets that we had owned, which I now regret selling, by the way. Create a little nest egg before '05. And at the time when the market crashed, it was like, oh, I'm a genius. I sold these properties, when they peaked in '04 and '05. But you look back now and you're like, man, I wish I'd kept those assets. I wish I'd found a different way to make my money work. And so, from the journey from '05 to 2009 was purely as a full-time real estate investor, right? That's all we did. But I had picked up, and by the way, you can cut me off at any point and ask me questions.
Keep going.
But I picked up this little book written by Gary Keller called The Millionaire Real Estate Agent book.
It's my favorite book.
And when I opened the book, I realized it's a business book. It's not a book about being a real estate agent. It's a book about being a business owner. And I was like, these agents can net $1 million a year running, an agent team. Like, how is that? And, he breaks down all the numbers and the whole thing. And what I had lacked as an investor was a system and a process, a model. I didn't have a model. I was operating on pure hustle. That's it.
That's
right?
how a lot of people get started, right?
Right. And making mistakes and figuring it out. And I really craved a model, right? My wife and I were buying about 20 homes a year, renovating those homes, then selling them to investors, turnkey as rentals, because we were doing this submarket from where we live. Can't do it where we live here. This was 2 hours away from where we live. And then we were managing the assets for those people. And before we knew it, we had 300 properties under management, 2 hours away from where we lived, in a, cute little town called Cumberland, Maryland. But it's a dying commute town, right? And the average rent in our area is like $2,700 a month. In Cumberland, Maryland, it's $600 a month, right? And so I learned what that world looked like in kind of like a lower price point, low dollar market. And man, but the learning that occurred during that time was ridiculous. I mean, I learned so much, right? How to raise capital and owner finance deals and subject twos and lease options and, wholesaling.
I'm going to jump in real quick because there's a lot to unpack there. It sounds like you've got a ton of wisdom, and I really want to, dive into it. But just to recap, just real, broad strokes here. So you got started in 1999. You started a recruiting business with your friend. You ran that for a little while, and then you decided to buy a townhouse just right next door. Got you your first taste of real estate. Over time, from 1999 to 2005. You kept on to the real estate thing. Over time, it started to work on you. You got, loved it a little bit more. 2005 came. You said, you know what? It's time to cut ties. Real estate's really what I like. Recruiting, I'm going to have to leave you. So you put all of your focus into real estate. From 2005 to 2009, you were an investor, but you didn't really have a model. Although from the sound of it, you did have a model. It sounds like you were fixing, flipping, selling, and then operating as a property management company, which is...
That's right. I mean, that was our model. We didn't have a great financial model. Let me clarify that, right? So that's
gotcha. Yeah. Okay. So that takes us up to today, correct? Is that what you do today, or are you? Tell us, what are you about, in the present day?
Yeah. So what we did was we kind of pivoted. What I realized was that, whether you're wholesaling or you're rehabbing or you're in construction, it's all, or, developer builder, it's all, earned income. It's on that earned income side of the quadrant. And really, I'd started this path to be on the other side, right? On the passive income side of the quadrant. And I realized that my personality, lent itself better. I wasn't a project manager type, right? I was more of a sales and marketing guy. And so my personality lent itself better. And I had a ton of relationships, lots of people, big network, to being able to help broker deals in my local market, right? In my local market, average price point's pretty good. And so I said, well, why don't I get my license? And instead of selling, renovating 20 homes a year in this, little town where the average reno profit might be like 20 grand, right? What if I sell 20 homes a year? So it's all earned income, right? At that point, I reduce the risk, and the average commission is like $14,000 a year. And I just do that. And we take that money and we buy one or two assets a year, continue to build our portfolio, right? And so that's how our model evolved. So like 20 homes turned into 40 homes, turned into 80 homes, turned into 100, turned into 200, turned into 300 homes. So we just started really scaling and building that agent business, and then taking that cash flow from that business. And then you've got decisions, right? I am either going to reinvest it back into this business, invest it in the person, put it in my self-directed IRA, or buy another asset. So we would buy some assets, invest in our self-directed IRA. And I just transitioned the business to be more of an agent team business, right? Versus to a total fix and flip and rehab business and wholesaling. And while building our family's portfolio, right? And, since then we have an offshoot that does investments. We have an offshoot we have a construction division. So my experience before provided opportunity for other team members, other people in my world, to be able to set those businesses up that I have a percentage ownership in, right? I don't run them.
Interesting.
Right.
Yeah. So you kind of operate it as a franchise almost. Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Yeah. I mean, it's not a franchise. I just own profit in those. I own percentages in those businesses, right?
But it's they are operating your business model.
Correct. Yes.
Gotcha.
Yes.
Very cool.
Yep.
So you have the brokerage side of things, so are you just wholesaling, or are you a licensed agent being brokering?
No, the majority of that is all brokering, right?
Really?
Yeah,
Okay.
That's all brokering. That's all on the brokerage side. So as an agent running a team, over 3 million in GCI as an agent, right? Because wholesaling and being an agent is really the same thing. It's the same when you really peel back the onion and have people kind of understand. You're essentially controlling real estate, one with a contract, the other one with a listing agreement. It's the same business. You're just marketing to two different types of people, right?
That's interesting.
And so I realized that if I control the real estate with a listing agreement, which, by the way, most people understand that, right, in the market, it's not looking for a needle in the haystack, that I could control distressed assets, pre-foreclosure, short sales, right, REOs with these listing agreements. And again, that was just to control, to create income from
Active
that business.
Income, yep.
Cash flow. So that I can then invest in what really creates longer term wealth, which is buying and owning assets and paying those assets off over time, right? And so to go back, right, what, I think just what a blessing sometimes, like some of these things are. In 2008, right, when I looked up and I said, you know what, because we weren't doing all that well in the renovating business, right? What happened was we would buy these houses, I would make money on it, and then I would take the cash that I had made, and then I would go buy another house. I felt like I was constantly snowballing the money down the road because nobody kind of shown me how to run it with buckets and all the financial knowledge that has to come with it, right? I wasn't paying myself properly. I was like, I'm like, are we making money? I don't know. I think
we're buying property
on this one, 40 on that one, but we were just taking the money and buying more assets, right? Instead of taking money off the table and all that stuff. So there was so much financial education. By the way, I'm a big proponent of having people understand the numbers behind how to run those businesses so that you could scale them. And, so when I looked up, I'm like, listen, I don't like managing contractors. I don't like the risk associated with it. The brokering reminded me very much of being a recruiter, fee for service. I close a deal, I get paid money, right? And I could continue, so I understood that business because I'd done that business before. And I understood the buy and hold business because I've been buying and holding that whole time. So I just kind of played my strengths. I think every investor needs to look at, what are their own individual strengths. Like my business partner on the investment side, he's super analytical. He's a project manager personality. He loves the art of renovating the property, right? After a while, it was just a widget to me, right? It was like, it wasn't about the art of doing it. It was converting it to cash, right? And then I just said, okay, well, I'm going to convert the cash on the agent side of the business. And so, but to go back in 2008, right, we had this whole implosion that happened in our local area. Everything was like a foreclosure or a short sale. And because I had been buying and going through this process 2 hours away from where I lived, I was very comfortable with that process. And in 2008, nobody was lending money to a recently self-employed real estate investor, right? But I had a friend of mine that had a lot of cash, and I just happened to mention to him, these properties peaked at like 300, these townhomes. We can pick them up now for like $150, $120, $110. Like I'm seeing, and the rents are like $1,500 a month. And I went in, and I can't remember the last time that this happened. And so he said, well, if you find them, if you fix them, if you put tenants into them, if you manage the asset, which is all stuff that I've done before, I'll fund the entire process. And now everybody calls this burring, right? Like, you have cash, right? Then you fix it up, and then you get it reappraised. And
you heard it from Rob first. He's the one who invented it.
Yeah, I didn't invent it. I mean, it's been around forever. But we just did that in 2008. That was the way to do more deals, right? And so, so I'm blessed because we still have a portfolio of properties that we bought, from that time that will be paid off in the next few years. And it's just such a powerful tool, right?
Absolutely.
To be, build your wealth.
Yeah, we've had a few people on the show who focus entirely on the burst strategy, and it's definitely something that everybody should consider if they're on the smaller unit end of the spectrum. Although I suppose it's the same thing applies. It's just different words are used for large multifamily properties. So that's awesome. So you're running the brokerage, and that is your active side of the income scale, where you're basically it's a brokerage. You're selling houses.
It's a real estate. We're with KW, so we run a large team within KW.
Gotcha. Okay. And then on the other side of the scale, on the other side of the of your business, you are buying long-term holds, and so you're buying out. Is it multifamilies or single families that you're focused on?
So we have some small multi, like 7 unit, 3 units, 2 units, and then the majority of them are all townhomes, right?
Townhomes. Okay. I guess that makes sense for the DC area.
Yeah. Yeah. We like townhomes. They're simple, right? They're little boxes. They're in high demand. We're in a very affluent area, so price points matter to be able to make the numbers work, right?
Gotcha.
You got to find what works in your market and then work it.
Absolutely. So, I also understand that you run a very large networking, a network in DC called Grid. Can you expand on that a little bit?
Yeah. So, Grid Investor was my first way of really building. I believe that really your net worth is in direct proportion to the size of your network, right? We believe that your network matters as you're building wealth and doing deals, and right, the bigger your list is, right, the more opportunity there is in that list. No different if you're doing content or being a wholesaler, right, or being an agent. So one of the ways I wanted to build my list in the beginning was get into the relationship with people that I liked, and the people that I liked were typically small business owners, in particular real estate investors, right? That was my tribe. We spoke the same language. I'd been on that journey. We're all on a journey together. The wholesaler needs a rehabber. The rehabber needs the lender, right? Agents need the rehabber. So, there's this tribe that we call that all works together in co-opetition, right? You all kind of need each other. And I just decided that I had some experience to share, because over the 4 years prior, from 05 to like 09, right, I had just actively been buying and selling and doing well and making mistakes. I figured I had something to teach, right, when it came to real estate investing. And I wanted to build my audience. And so I started hosting an event where, first it was 5 people, then 10 people came, then 20, then 40. And we'd have 100-person standing room only in the room. And all the while I'm developing relationships with these people, right? And then I'm doing deals with these people, and they're giving me listings, and they're giving me buyers, and I'm lending them money for my self-directed IRA, and they're lending me money. And I'm like, this is super awesome. It became a lead generation pillar for my business, right? And then a couple years into it, I had some of the members say to me, hey, this is awesome, but can you host this at XYZ location? And I was like, listen, I'm busy running a business, and like, I don't have time, right? And they're like, well, what if you license the rights to me to do it the way you do it, right? And I run it. And at first I pushed back on 2 different people, and then finally I'm like, okay, let me look into this. How would we do this? And we looked at like the CrossFit model, where you do licensing, and we said, okay, well, let's try that. Let's license our curriculum. Let's license the way we do it, and let's set one up like 40 minutes down the road, right? And then that grew to several thousand people, and it became very successful. And then we said, well, let's do it again. And then we just kept doing that. And so we have 10 chapters in the DMV area. And we are, we're going to expand it. We've got people in talks in California right now, in Florida. So now that we know that this is a legit, it's always been a pet project. Now that I know that this is a legitimate, hey, I can put this in 300 locations all across the country. We'll go down that route at some point, right? But if you go to Great Investor, you could see what it's all about.
Yeah, absolutely. I mean, I've never heard of anybody.
Platform for an agent or a wholesaler or even a hard money lender, right? Like I have the largest hard money lender on the East Coast that runs our Falls Church location, and so it's been great for us.
Yeah, absolutely. I've never heard of someone essentially licensing their meetup, and that's a really unique concept, especially if you've had so much success with it. It sounds like you guys know what you're doing. You found a model that works in every location that you sent it out to, so that's it's only logical. On that note, I mean, a lot of people listening, watching, they they do want to know how to network. I mean, everybody knows that real estate is first and foremost a relationship business, and networking is one of the most important things that you can do. So for everybody watching and listening, if they wanted to get started, maybe hosting their own meetup, what are some of the top 3 pieces of advice that you would give them for getting started?
So if they're going to host their own, so I'll give you advice for if they're going to host their own and what they should do if they're just networking, right?
Okay.
Those are different. So if they're going to host their own, they need to think about content well in advance, right? So, I set out an agenda and said, okay, January, we're going to talk about this. February, it's going to be this. March, it's going to be this. And we made it so that the curriculum built on itself. So that at the end of the year, you had what the full life cycle of what a real estate investor's life would look like, right? And you have to be consistent. You have to have the same time, the same day, and you never miss. We've never missed one in 13 years, right? You think about that. It's just been consistent the whole time, right? So people learn to rely on that. And then you have to give, man. You got to be the go-giver. You got to give lots of content. You got to help people build their world through your experiences, right? And so that means that you actually have to have some content to be able to give, right? Or you need to bring people in that have the content to give, and you could facilitate it. But people learn through stories, and people learn through sharing of experiences. And so, I look for somebody that has the ability to tell a story, right? And can lead a room, because what you're doing is you're building your leadership skill set when you do that. So that's what it looks like if you're going to lead one of those. Consistency, content creation well in advance, right? And be a leader, and come from, be a go-giver, right? Great book is Be a Go-Giver. If you're networking in a room, I always tell the story of how many people walk into a room, right? Go and collect business cards, and then put them on the desk. You just look at these things; they're still right, and then never do anything with them ever again, right? I'm like, you might as well have just stayed at home, right? You need to take this and somehow figure out a way to get it into your system, or you use technology, like you find people on Instagram, follow them on Instagram. Data, having a CRM is important, but today Facebook and Instagram is a natural CRM. It is a CRM, but it won't do everything that a high-powered CRM, customer relationship management software, will do, right? But it will, it's a start. And so you need to build a list. So if you're going to go out there and you're going to network and you're going to spend time away from your family, you need to build that list, because I've got it down now. Every time I put somebody in my database, I've earned a future $500, right? I just know that I've earned a future $500. And so, but you need to then have systems to be able to touch that database over time in order to do that. So when you're networking, right, what you want to be able to do is not just collect cards. You need to make connections. You target the people that you want in the room that you want to connect with. And then you invite them out for cups of coffee after the fact, right? And I told everybody I built my business one coffee at a time, taking people out, learning about them, caring about them, putting them into my CRM, talking to them on a monthly, quarterly basis, right? Inviting them to events, and time on task over time rewards you with that, right? It's just a basic system. So, and people want to share. You get a lot of people that spend a lot of money, and I believe in education. Like, you should go spend money to go learn from people on how to do stuff. It cuts your time frame, from years to months. But you could learn a lot over a cup of coffee, right? You could buy somebody a cup of coffee or lunch and get a hell of an education by just doing that, right? And you build relationships, and you end up doing deals with those people, which is more valuable than the actual knowledge itself, right? I mean, knowledge is the most valuable, but those relationships are amazing.
Absolutely. I mean, it always does. It comes back to relationships. You said it yourself. One thing that I really liked that you said when you're talking about networking is to make sure that you're touching them over time, and that you're not just grabbing their card. You're after the actual meeting, you're asking them to go to grab a cup of coffee. You're just checking in with them, putting them in your CRM. It can't stop at the meeting. You have to. The point of networking is to develop relationships, and that can only take place over an extended period of time with multiple touch points.
Well, the biggest thing is, when you think about branding, you can only hold 2 or 3 brands in your mind at any point in time, right? And so if you're a wholesaler, if you're a rehabber, if you're an agent, know that people are constantly being bombarded, right, with information from other wholesalers, other rehabbers, other agents. So in order to occupy somebody's brain space, they need to see you more than they see the other person. And they need, and so you have to figure out a way to get in front of them without being too annoying, right? Providing value, so that you can occupy that space in their brain, And so CRM helps you do that.
Yep. And I remember one of the in one of the marketing classes I took, that one of the stats that kind of just stuck out at me was you have to I'm going to butcher this. You have to get in front of people 7 times before it enters their consciousness, essentially, before they can remember you. So that's absolutely true. Over time, you have to be interacting with these people. So, we are getting to the end of our show here. Before we go, though, I do want to know just a little bit about what you feel makes you the most successful. So if you were to go back to the Rob who started out back in, 1999, you bought your first townhouse. If you were to go back to him and say, hey, Rob, do this. This is the one piece of advice I'm giving to you going forward. What is that piece of advice you'd give yourself?
Oh, man. Buy as much as you can early, right? So a couple of things come to mind. Number one, find somebody that's already done what you've done, and see if you could be mentored by them, right? Because the learning kind of gets really fast. See if somehow you can just do something for them. Be connected with them. So if there's somebody out there that owns 100 or 1,000 units or whatever it is, do whatever you can. Mop floors, clean that, figure out, right? Get connected so that you can learn, right? So I would tell the young Rob, get connected to somebody who's already incredibly successful, or get a coach early on to help you build what you want to build. The other thing is you need to understand what you want to build, right? So try to get clarity on that. And you can ask yourself some questions like, who do I know that is living the life or the lifestyle or the real lifestyle, has the real bank account, has the real P&L, right, that I want to be connected with. You see a lot of flash out there. It's like, show me your P&L, show me, right? And so and I would never sell anything, right? When I talk to other investors, I think the number one regret a lot of investors have is those assets that they owned, 15 years ago, 20 years ago. Yeah. Only kept that thing, right? So I would have sold less, right? I would have figured out another way to raise the money or the capital. And, just take action. I think the biggest thing is people get frozen a lot of times, and just keep taking action, keep learning, keep failing forward, And, the piece that's not talked about enough in our business is to get real financial training, right, on your P&Ls and how to run a business. So many people are like, I'm going to start a business, and have no understanding of cost of goods sold and expenses and what profit margins they should have. So you need to build a pro forma and understand what that pro forma is going to look like, and understand what the P&Ls are going to look like. There's not enough discussion in our industry about that. There's a lot of just go do a deal. Okay, once you do a deal, what do you do with the money, right? That's an important piece, right? You can't put it all in your pocket because you're in business with Uncle Sam, right? You got to understand you're in business with Uncle Sam. And by the way, you're in business with your business. Your business needs to have fuel. So you need to understand those numbers. So I would have said get an earlier education on financial training.
Absolutely. I mean, that is super important. I mean, I know I made that mistake when my first couple of flips, just, taking the money and running, and then realizing, crap, I got to give capital gains.
I got taxes, I got a business, I got marketing expenses. Yeah.
Yep.
All that stuff.
Absolutely. I love it. Well, Rob, we are at the end here. You have given us so much in terms of the wisdom that you've shared with us, but everybody needs things. We all need to receive things as well. So if someone were to bring you something, what would you want to receive?
If somebody were to bring me something, what would I want to receive?
Do you want deals? Do you want referrals?
I think the biggest thing is become part of our network. We're going to scale and we're going to make it a global network, not a national. It'll be a global network. Our distribution system will go through the different brokerages that are out there, and I'm looking for investor agents. So people that might be licensed but think like a business person and think like an investor. Essentially, I'm looking for somebody like me in other markets. Because I want to develop relationships with them, because they could be somebody that sets up a future grid platform for us in another market, right? So that would be the way.
Awesome. All right. And if somebody did want to get in contact with you, what would be the best way to do that?
Sure. They can email me, rob@thecazagroup.com, or find me, on Instagram, Rob Chevez. You'll find me there. I'm the only Rob Chevez that I know of.
Perfect. Well, Rob, thank you again for coming on. I know I can speak for everybody we appreciate the wisdom that you shared. For everybody who wants to get in contact with Rob, check him out on Instagram, or I will put his LinkedIn URL in the show notes as well.
Yep.
Other than that, thank you for coming on, and we look forward to seeing everybody else on the next episode.
Gabe, thanks, man. Take care.
Thank you for joining us on the Real Estate Investing Club. If you feel we provided value, we would appreciate it if you hit that thumbs up, share it with your friends online, whatever it may be. If you'd like to share or partner with us on an investment deal, we are always looking for quality projects. Go to www.therealestateinvestingclub.com to get in contact with one of our partners. Otherwise, I hope you guys have an absolutely fantastic day, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.